The state pension is a really valuable benefit that I make sure all my clients are taking full advantage of. After all, you're entitled to it, and it can play an important role in providing a guaranteed income throughout your retirement. I understand, though, that the state pension can be confusing, especially considering the change in rules in 2016, when what's known as the new state pension was introduced. The new state pension replaced your entitlement to basic and additional state pension if you reached state pension age on or after 6th of April 2016. When calculations were undertaken to establish your projected state benefits in April 2016, you may have found that you're not projected to receive the full new state pension when you reach state pension retirement age. You may want to check out the description below to better understand the transitional rules and how this calculation was done. Or you can click the link in the top right hand corner of this video now. A question I'm often asked by clients is whether it's possible to defer the state pension and on what the implications are. It's important to know that anyone can defer, even if you've been in receipt of your state pension for years, as long as you have not previously deferred. But why might you consider deferring? Well, maybe you have reached state pension age but are still working, or don't yet need the additional income. Your state pension income may create an unwelcome tax burden and could push you into higher rates of income tax brackets, for example. Having said that, there are tax planning opportunities and considerations for people in this situation. So maybe speak with a qualified financial planner or a tax expert to understand what's best for you. One thing I must point out is that you don't receive your state pension automatically. You have to claim it. You should get a letter no later than 2 months before you reach your state pension age telling you what to do. The deferral rules are different depending on when you reach state pension age. If that was before April 2016, deferring taking your state pension was more attractive because you only had to defer it for a minimum of 5 weeks. But if you deferred for at least a year, you could take the deferred income as a lump sum, which would be paid to you with interest at 2% above the Bank of England base rate. That option, sadly, has now gone. You must defer for at least 9 weeks if reaching state pension age after April 2016, and there is no option of taking a lump sum. One other benefit of deferring under the old state pension scheme is that your deferral benefits were paid out to your spouse or civil partner if you died in deferment. So, what can you expect to receive if you do decide to defer? Well, the rate of increase during deferral is 1% for every 9 weeks deferred. In other words, it's an increase of just under 5.8% for each full year of deferral. Again, I'd recommend that you speak to someone qualified, a financial planner, to help you calculate whether it's worthwhile financially for you to defer, as there is no one-size-fits-all, I'm afraid, answer in terms of the break-even point. As mentioned, there will be no lump sum option, so all benefits must be taken as income. And whilst it's not possible for your surviving spouse or civil partner to inherit your deferred new state pension, your estate may claim up to 3 months of your arrears. Also be aware that if you or your partner is in receipt of certain state benefits such as universal credit, then deferring your state pension is not going to increase the state pension payable and may affect how much you can get in benefits. You must tell the pension services if you're on benefits and wanted to defer. Thank you so much for watching. I hope you've enjoyed this video. If you have, please press the like button now and of course subscribe. I'm Justin King. I'm a chartered and certified financial planner. My aim is to help you live a successful life, and that often involves understanding your money. I host a podcast called the Retirement Cafe Podcast. You might like to check that out. I'll put a link in the description below. And of course, you can sign up for my weekly newsletter, which is packed with inspiration and tips for a successful retirement. For now, I'm Justin King, helping you live your best life.